Hi, good evening, ladies and gentlemen. Welcome to this next episode of Pulse. It's my pleasure to be with you within a period of 7 days. And for this, I would like to thank our dear Finance Minister, Ms. Nirmala Sitharaman, for coming out with a bonanza announcement today morning at 10:15 a.m. today. Now, let us understand what has actually happened. All of you have seen how the stock market has gone up today, with Bank Nifty going up more than 8%. I don't know whether you recall 1 year back on 21st of September 2018, when the DHFL issue happened and there were a lot of other issues in the market, in one day, Bank Nifty had gone down by 1500. So it's kind of a sweet revenge, I must say, by the Bulls after 1 year period. So now let's look at what exactly the kind of announcement that she said, and why what was done today will be talked about for some days to come, and why a lot of people have been comparing this thing to be bigger than the budgets which have been announced by this particular government. The first major thing which has been announced by the government is that the corporate tax rate effectively can go down to 25.17%, plus the surcharges which are there. So 25.17%. Why is it significant? Because most of the other countries that we were competing against had a lower tax than us. Now, with some of these countries, we would have a similar tax rate. What is the other advantage of this? There are a whole host of companies from FMCG sector, Adani Group. There are so many of these different companies which are there. ABB, one of the recommendation that we gave today, in addition to what we gave today on City Union Bank and Federal Bank, lots of companies like ABB were paying 35% or more tax rate. What change does it bring to them? So effectively for these companies, if you see that the tax comes down by 10 rupees in case of a company like ABB roughly, and some other companies it could be lower, what it means is that the upside on stocks can really go up. Now let me give you an example for that. Suppose we have a company which is making a profit of 10 rupees, right? Now, if they're making a profit of 10 rupees, now it was also getting a multiple of, say, 30. So the stock price was 300 rupees. With this change, what happens is that my earnings would go up substantially because I don't have to pay tax at the same rate of 35%, but I have to pay at 25.17. Now, because of that small change in tax, my earnings, for example, in this particular, say, for example, go up, say, to 11 rupees or something of that sort. Now, for that, my not only the earnings go, the multiple, the stock price goes to 330, which is a 30 multiple. But because my ROE has improved, market will give me a better multiple. So probably the stock price can go up to 350. Overall, we believe that because of this particular measure on corporate tax, the overall earnings of the index could go up by roughly 7-8%. And because of that, the stock prices, because you have a better earnings now, could go up by around 10 to 12%, depending on the sector that we are talking about. We'll come to some of the sectoral impacts later. Now, let us talk about some of the other things in sync with this. If you're a MAT paying company, your tax rate has been reduced from roughly around 18% to 15%. If you are today a company which has been set up new, your tax rate will be just 15% and with surcharge around 17% or so. If you're a new company and you start manufacturing, just imagine how much could be an increase for Make in India. I think so. Prime Minister Modi has still not done much on Make in India. This has been the biggest announcement with regard to Make in India done by the government. Today, our tax rate on new investment will be similar to China, which can really ensure that our economy does really well. We produce products in house, we export products, we don't import everything. So, for that reason, this is a very important measure which has been undertaken by the government. The only segment, so your question would be, is it that all companies benefit from whatever government has announced? My answer to that would be probably around 85 to 90% of the companies benefit. Some will be more, like who are the highest taxation companies. Some would be less. Now, which would be less? Those will be the companies who typically are in the tax bracket of 18 to 22%. There, we might see that the tax benefit may not be that much. But overall, it is giving money in the hand of the company, more money to invest, more tax break. You have start a new company, you invest, you pay lower tax. It's a very big thing for Indian corporates. I recall former finance minister of India, Sri Arun Jaitley, had talked about 25% tax rate. Unfortunately, during his time, because of certain other things, he was not able to do it. So, what is that change which has happened? It's clearly the government has said growth is more important than fiscal. The overall impact on GDP because of the additional spend of roughly because of the measures which have been announced today, the impact would be close to around 1.45 lakh crore. The overall impact on the GDP could be close to around 0.8% of GDP, which is a very big number. So the government has said growth is important. And if growth happens, we believe that there will be enough tax. And in addition to what government has done, they have to just do one more thing. They don't have to come every week with new announcement for every sector. I don't think so that's required. They just need to have a very good divestment policy and privatization of public sector undertakings. If they are able to do that, I can assure you the market sentiment will go up even further from what it is today. So you don't need to do anything else. There have been some talk of people not being happy because personal corporate tax rates, personal tax income tax rates have not reduced. But I think so, considering the fiscal, it is a prudent move by the government not to reduce that. However, what they have announced, two more measures, they are excellent for some of the companies. One of them, some companies which had already announced buyback, they will now be not supposed to pay tax on that. So that's a very positive news for some of the IT companies which had announced buyback. Second thing is that on the capital gains for people between income to 2 crore to 5 crore and 5 and people beyond 5 crore income, short term capital gain and long term capital gain had been increased. That increase is now back. It's reduced again. So, for example, between an income of 2 to 5 crore, the tax rate for long term capital gain, which was 11.96, was increased to 13, now back to 11.96. Short-term rate from 17.94 had gone to 19.5, now back to 17.94. For people beyond income of 5 crores, short-term capital, long-term capital gain 11.96 had gone to 14.25, now back to 11.96. In case of short-term capital gains, from 17.94, it was to 21.37, now back to 17.94. So if you look at it, the HNIs who were really very negative about Indian economy, and mind you, look at the kind of flows which have happened in LRD. LRD basically around $250,000 odd. You can take out of India every year. Lot of HNI people were shifting money outside India, which was also putting pressure on the currency because they were fed up with the increase in tax rate. All those people will be very happy. And for that reason, we clearly believe that there would be substantial improvement in investment cycle. Now coming back to why our economy is in such a mess. Let's understand the genesis of the problem. I'm sure all of you know that for a period from 2002 till 2013-14, real estate was doing pretty well. Then stock market has had its up and downs. So people were not making money in real estate, they went to equity market. Now because government was increasing taxation, people are not making money. If people say money, they invest money and they don't make money and the money gets stuck, what happens is the movement of money reduces. And when movement of money reduces, the velocity of money reduces. What it brings about is lower growth and people, you know, having lower incomes and the economy standing still. What does this efforts of the government do? Right? That's a very important thing to understand. That why we are so, considering what has happened today, we feel that it's a very bullish kind of a statement made by the government. They have said we are, though fiscal is important, we are first bothered about growth. We want the economy to do well. So since this money will come to the corporate, they will invest money. The tax rates from capital gain have reduced. So basically, what has happened is my return on investments will improve. So earlier, for example, a particular project which I was looking at investing in, for example, I would have a tax rate of 35% on that investment. But now, if I have a new company, I have a tax rate of 17.11%. So look at the kind of difference it's going to make to my IRR calculation for a particular project. Well, let's discuss a little bit in detail about what sector and broadly what could be the kind of impact for these. Let's talk first, for example, for FMCG sector. FMCG sector, you have clear case, lower taxation. Most of those companies are profitable. Lower taxation, they make more money, better ROE, good multiple. In case of manufacturing companies, your IRR improves for further incremental investment. That's one key determinant of capital formation for capex cycle, and we need to have that for all infra companies, for all companies in capital goods sector. Everything this becomes quite positive. And because of this particular measures, you will see that people will start investing money. The psychology of the investor was that the government is only interested in taking tax. Now the psychology is okay, government is giving us back our due money, and now we can use this money to spend money, to do investments. For that reason, there will be a benefit. Cement sector, if you see a revival in the real estate, it will benefit. If you see in case of IT sector, some of the companies benefit because of the buyback related thing. Some of the companies, if they are at a higher taxation, though some of the IT companies pay less tax. So it depends on company to company. But if someone is at a higher taxation, they will pay lesser tax. So for this particular reason, we believe that today's measures by the government are excellent in order to grow the economy. Now, let me just look at some of the questions which people have asked, and if there is time, then I might take talk about the things in Hindi as well. Uh, okay. So the first question that somebody has asked is, I missed an opportunity to invest. Will there be more correction? On bull market has already started. So what was the topic today? Is the bear market gone? So I believe that from a risk reward perspective, the chances of a bull market now are significantly higher than a bear market. And let me tell you why. The reason for that is, one, we talked about the earnings growth. Secondly, a lot of stocks are still down 60-70%. So as the profitability of these companies improves, you'll see a multiple re-rating. And for that reason, there's a high chance that you can see the bear market going down. One important question that some people might ask is, do you think so from tomorrow economy will start doing good? The answer to that is no. The market is always ahead of its time. Even if the economy takes 6 months to revive, you will still see the market, if it believes that after 6 months the economy will do well, next quarter, the September quarter, even if numbers of companies are bad, still you will see stocks going up. So yes, because we have seen very bad times, because valuations have come down, because now people feel that the government is helping them out, we do believe that there's a strong likelihood that the market is coming back. Now, to your question, should I buy now? Yes. But you see something very interesting happening in the market today. All stocks were not up. You still had the DHFL, which was down. You still had some of the other stocks which had gone through bad time being down. You still didn't have Yes Bank going up very big. So, again, look for quality stocks, or say high beta stocks, like for example the banking sector, but don't go only for beaten down names, please. That is not good way of investing. It is fine, rather than making 50% return, make 30% return from these levels, but don't try to bottom fish. Somebody has asked me question about public sector banks. Obviously today's action is going to be pretty positive for the public sector banks. Reason is because if corporates have more money, they will look at investing more. They will take more money from banks. Banks will make more money, and overall system will improve. So absolutely, for PSU banks like Bank of Baroda or PNB, it does make sense to look at buying these stocks. So somebody has asked about Edelweiss. Well, in case of Edelweiss, you've already seen the stock had really done well today's market. I think so. The way things are panning out, if we do see a liquidity improvement and some more positive news in terms of funding of NBFCs, then Edelweiss, from a risk reward perspective, can be looked at this particular price. Somebody, Peter Disa, had asked is asking about what happened. I think so. We have already explained, so you can refer back to the YouTube video again. Somebody has asked Bank Nifty resistance at 29,700 on the way. Are you agree and work economic crisis with Trump trade? See, the thing which, in fact, the kind of war which is happening between Trump and China, it's an excellent story for us if we reduce, like we have reduced our taxes. So many companies are talking about that international companies are looking for suppliers outside China, but they were not looking at investing in India because of high taxes. This is the right moment for us to get the Achhe Din. So obviously, I think so that don't worry about Trump tweets, right? The only spoiler which could happen now is that if there's a war between Iran and Saudi Arabia, and for that reason oil goes to $90 or something, that is as a caveat, that is something which could be negative for the market. But other than that, we are very confident that things look quite decent for the market. Chandra has asked a question about issues of less consumption. I agree with you that the consumption expenditure is reducing, but I think so as there's a lower tax which comes. There's obviously FMCG companies can pass on that benefit, and at lower price, you can see the demand revival. See, the cost of living has gone up. People's disposable income is not increasing. So if you see a disposable income increase by people because you just cut prices, which will also lower inflation. So I think so if a lot of companies are able to do that, you could see consumption rebounding going forward. Someone asked me about Maruti. Uh, in case of Maruti, there are two things. One is a structural change which is happening, where you're seeing a shift happening. The Uberization, and we have seen a lot of press statement on that even by the FM. Today is not the day to criticize her, but obviously there's a structural issue, and also because of increased cost of ownership of vehicles. I think so. The GST cut, if it happens, you could see a further rally in automobile stock, but it has to be a GST cut which needs to be for a longer duration of time. If they say something that for next 6 months the cars you buy, there the GST will be lower, that will only do pre-buying, and after 6 months you will again have a challenge. So I think so. If they cut GST rate, to 18%, but make it permanent, that is what is required because the cost of ownership of car has really increased. There are structural challenges in the industry. We want, the minister like Mr. Gadkari not to speak too negative about internal combustion engine. If those things happen, then you would are bound to see that this sector does well and Maruti can do well. Somebody has asked me about Capacite. So Capacite looks very good. We believe from here there could be a 45% upside in the stock as real estate sector does well. And they, if I remember, they've got a recently an order from Sidco, which is kind of a secured order. We are quite positive on that particular company. The valuation wise, also that stock is trading at less than 10p. So Capacite is a good stock, so you can continue holding that particular stock. The other question that people have asked is, what about some of these consumer electronic stocks, Merck, Voltas, and all. So obviously, if people have more money in their hand, so they will bound to buy a lot of these stocks, these products, and also there's an opportunity for corporates. They can cut prices if they want to. The lesser corporate tax that they're paying, they have a choice: cut prices and get more volume, or keep the same prices and have better profits and get a higher multiple. So for that reason, there's a re-rating which is happening. So I think a lot of people have been looking at whether we can. A lot of people have been looking at this particular thing, that what should happen to the market from these current levels. See, there are a lot of people who have a negative on the market. So there are a lot of short sellers. And now what we have seen is that the market has gone up, right? Because the market has gone up, what will happen is these short sellers who were negative on the market, they are going to wait on Monday what to do. So like one of the friend had just put on the chat that there's some resistance happening. So the critical thing now would be that if these short sellers on Monday feel that now there's no hope, then you could see the market even going up because they need to square off those particular positions. Let me just see a lot of questions. Somebody has asked me a question about which sector are we bullish on. I think so. We did a pulse last week only where we talked about our mid cap picks and where we had talked about how mid cap stocks are due for a rally and which stocks we are liking. So you can see those on our YouTube channel. In terms of sector, clearly, the high beta stocks like we've seen in case of Bank Nifty, they will obviously do better in a bull market scenario, and I think the mid cap also should do pretty well going forward. Somebody is asking question about stocks like HDIL. I think so. There's no point trying to buy those stocks. See, they have gone through a bad time, and I don't think so. You should look at bottom fishing those stocks. AMC companies better to buy. Absolutely, AMC companies has a wonderful time going forward because two things. One is they are sitting on cash. They can easily deploy that money. Foreign investors, emerging market funds from 2011, this is the weakest allocation to India. They will come in the market. You will have, like for example, in case of Reliance Nico, you will have a lot of Japanese money coming into the market. So AMCs should do well going forward. And because of the changes which have happened in terms of expense ratio and all, we feel that the larger AMCs like HDFC, like ICICI, they have a brighter future ahead for them relative to the other smaller AMCs. Let me see some other stocks. Please don't look at buying stocks like Suzlon because there are a lot of challenges in that. Sun Pharma we continue to like. We have a target of around 500 for that. People have asked, mostly questions. Mahanagar Gas, another stock. So I think it's trading at a significant discount to IGL. So it can be looked at. There's a clear levers there in terms of growth going forward because it's been a slow growing company. We think that there is a clear possibility in case of Mahanagar gas over next 6 months to improve volume, and from a valuation perspective it is quite cheap, so these stocks can be looked at. uh, Somebody has asked why is ITC down. So I think so in case of ITC, again today is not the right day to criticize the FM, but this e-cigarette ban clearly also suggests that okay, they don't want e-cigarettes, but the industry size was not even $50 million. But what can happen is that because of the fiscal constraints which are there on the government, ITC may be told to increase tax on tax that is levied on cigarettes, that may be increased, and for that reason ITC is down today. People are asking questions about Yes Bank. So in case of Yes Bank, we've seen yesterday Mr. Rana Kapoor being forced to sell his stake. Going forward, like I said in my last pulse, please don't bottom fish Yes Bank. If you hold, you can continue holding on the assumption that hoping that there is some deal which happens. If there is no deal which happens, a very large amount of money is there. So as we had discussed last time, around 10,000 crores is required in case of Yes Bank. If they are able to garner money over next 6 months, then there's hope. So yes, this announcement is positive, but whether Yes Bank can do really well, we are not 100% sure of that. So bottom fish would be recommended by us as of now. So, I think so. We are done with most of the questions. If there's something specific that you want to know about, you can always, send us your queries at research@ifl.com. We'll be happy to answer. We continue to like, the stocks that we have talked about. Some people are just asking questions on life insurance sector that we really like about. Some of the chemical companies also, we like about. We have talked about some of our picks, like for example, Deepak Nitrate last week only. So I don't want to repeat those recommendations, but broadly speaking, as we have sent some three recommendation to our clients today as well. Clearly we feel that the market scenario has changed, and this is the right time for all of you to invest in the market. And we really believe that the bear market may have finally come down, and the bulls might be raring to go. Thanks a lot for your time. Bye bye.